Hi folks, Lee Gettess here with the Market Sense for the week of August 12th, 2014. We're going to look at charts that come from the Trade Navigator software, which makes my life so much easier than it used to be. And we're looking at a weekly bond market chart here, and you can see bonds had a real explosion upward last week and got well above the 140 level, and they've turned back down, which that was kind of a little bit of an overreach, I think. And what they're doing here is, well, nothing yet. If they were going to continue up, the next target is up here around 140, 18 to 20, let's call it. And clearly they've done none of that. The support to hold them, to send them back up there, however, is in the mid 138 range, 138, 15, 16, right here at the middle moving average. And they haven't gotten down to that yet either. So, you know, they're not really telling us anything. The increase of volatility is nice because it should make for some profit potential, but they really haven't done much yet. If they do break down hard, and I don't know that they will, but that lower moving average down here at the red line is around 137.04. Nothing to say we can't see them down there, just like we might see them up above 140 again. But I think it's going to take some sort of surprise from, well, probably not even an economic report, probably something overseas to jolt them out. Wouldn't surprise me if they just remain inside of last week's week this week. Say that 3 times fast. Now, in stocks, we had a breakdown, largest of which we've seen in some time, and a very rapid recovery. This low down here that you can see was actually made Thursday night, so all of this recovery is just since then. They certainly look, with the speed of that recovery, that they might be just blowing right back up to new highs, and I'm not telling you that they can't. But what they've done is find resistance. This middle moving average here is around 1941.5, and this previous swing low that they broke down from is 1942.5, and the high so far is 1941. Now, they were going to find resistance in this vicinity, whether they're going to continue up or not. There was going to be some reaction there. But they could react right down and come all the way back down below 1900 here to test this low, and I can't tell you they won't take it out. They certainly could, but holding this resistance means they have the potential to head down below 1900 again, and we're kind of on the lookout for that. They don't have to, though. The recovery was very nice, very, very fierce, quick recovery, and if they hold without breaking down much further, then they can poke through this and be up around, the upper moving average there is 1967. But again, I think if they go up here, very possible that they make new highs, and I mean still this week, although not necessarily. The question in my mind is, if they do just blow right back up to new highs, is that beginning of another leg up and they're really just going to do like this again? Or once they get to new highs, should they be at some risk up there? I don't know that yet. We'll have to monitor them if they do that to see how they're doing. But for right now, the question is just, do they do that or do they break down? And Tuesday, for what it's worth on a very short-term basis, was an inside day. So, you know, some sort of breakout is likely now. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with. Thanks for checking in to see how we're looking at things.